Let's do some review of what we've learned here in the last 7-8 days in preparation for a test that is coming up real soon. A system for collecting and reporting on business or personal financial activity. So this is accounting, and the whole purpose of accounting is to record transactions, analyze what's going on in the business, and use that information to make informed decisions. Oh, where do you place your thumb on the 10 keypad? 0. You guys have that down. These are things that you own or control either personally or within a business. And those are assets. Those things, tools, resources that you use in order to conduct business or to run your life. Such as a car. A car is a personal asset. It could also be an asset of a business. This is what you owe to others, like a loan for a car, a type of payable. I put a hint in there. So generally, we refer to this as accounts payable, very common account that we'll be using throughout our accounting study. Accounts payable is when you owe money to somebody else. And generally, payables are expected to be paid within a relatively short period of time. Generally, every month you go through and you make a payment on accounts payable. Sometimes even a shorter term than that, depending on what agreement you have with your creditors, those who actually allow you to buy now and pay later. Assets equals liabilities plus owner's equity. That is, yes, the accounting equation. And once again, must always be in balance. The total of assets must equal the sum of your liabilities and your owner's equity. And the other thing that we looked at as far as understanding this is that you have a bunch of assets, and this side indicates where the financing came for those assets. It also indicates, because of that, who has a claim to those assets. Very important asset, cash, critical. The only way you can pay your bills is with cash. You record a transaction in these two accounts when an owner invests money into a business, and that would be cash and capital. This is a type of equity showing that someone other than the owner provided the money for the assets of the business. Starts with an L. Liability. This account represents the owner's investment and claim to the assets of the business. And this is an owner's equity account, and we call that account, begins with the letter C, capital. Capital account represents the owner or owner's claim, financial claim to the assets. This will happen if you do not make your car payments. What's the bank going to do? Yes, they will repossess your car. Don't want that to happen. Pay your bills. Critical. Okay, here's a little transformation of the accounting equation. So assets minus liabilities would equal, yes, the owner's equity. And the assets minus the owner's equity would equal the liabilities. And our last one, lunch today. Well, we'll end it there.